entrepreneurs live fast and kind of loose, right? And one of the things that
some of them do.
One of the things that hurts them is not having adequate records. And then coming to their accountant during tax season with a shoebox of receipts or with 12 months worth of bank statements and dropping that off and saying, good luck.
Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Encompass More Asset Management LLC is a registered investment advisor with the U.S. Securities and Exchange Commission and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.
Hey guys, welcome back to another episode of the Charme Wealth Management Podcast. Today we're joined in the studio by Grayson Tracy of Savage Esplin Radmall, CPAs here in Southern Utah. Grayson has over 7 years of experience now. He's got a master's degree in accounting and is a licensed CPA, so can represent people to the IRS and work in public audit if he ever decided to do that. However, I don't think he does. Anyways, today we are talking about the 3 things you can do right now to prepare for a better tax season with your accountant, whoever it may be. So with that, I'm wishing you the best experience with tax season, and I hope you enjoy the show. We are currently, the 23rd of January. IRS opens next week. Start accepting returns?
27th, tentatively.
Tentatively the 27th. Okay. So everyone should have started gathering their tax documents or trying to understand where they need to at least creating a list, in my opinion, right? Like you should be in that mode of thinking like, okay, I got to start working on taxes.
Mm-hmm. Yeah.
And so I'm not a CPA though. And
You're
what I know,
luck.
yeah,
We have
I'm
one
strategic.
here with us today.
I was raised by a CPA and I am strategically not a CPA, right? So I don't work I know for our firm, people always have this question, like, what should I do to be prepared to, start the financial planning process, or what should I do to prepare for our meetings, or right? Like it's a common question I get.
What information do I need? Yeah.
Yeah. And for when people work with us, I have answers to those questions. And to me, it always seems simple because I do it every day and we help all these people, but to other people, it's like pretty enlightening, right?
Mm-hmm.
And so I thought it'd be really interesting to have somebody that works in a tax firm that has a lot of clients, and you guys have been around a long time. Like, what's a tax firm's perspective on how do I be ready to engage with my accountant this year, right? One of the things that I've noticed the last couple of years is most people complain about their accountants. Most accountants complain about their clients. Mm-hmm. And the costs are going up typically for people, which is just an additional friction point. And no matter how good an accountant's doing, generally if people are paying taxes, they're usually still not too happy. They think their accountant should be doing better.
Yep.
Not always. But that's an easy sentiment behaviorally to fall into, right? If it's like, well, my accountant should save me taxes. Well, I don't want to pay any, so it's like,
yeah.
Right. And so what I've seen is people go to try to, leave their accountant for, greener pastures and they can't find a new accountant. Mm-hmm. It's like a really interesting, there's a huge shortage of tax professionals in the country.
Absolutely.
And so what I oftentimes find myself coaching clients into is like, well, because I get asked for referrals all the time from people. And I say like, well, what are you not happy about with your accountant? And I usually find that's, in my opinion, stuff that's not a big concern, right? And my advice generally is you should just talk to your accountant and try to figure out what you need to do to, communicate better. What do they need from you, right? Like it's a relationship still. It's a professional relationship. You're, for anyone listening, if you didn't know this, your CPA is not your slave. They're not your, tax underling. And they're also not a secret agent for the IRS. Okay. They generally want to help their clients. They want to have, do anything they can for the most effective outcome within the bounds of the law.
Yep.
Mm-hmm.
But there's a huge shortage of tax professionals. And so they're really busy. They're slam busy typically. And if you are just mad because they don't carve out enough time for you, it's typically because you're not paying them enough and they just do not have more time to give you. So they need, in my opinion, increased efficiency.
Mm-hmm.
And so what I found in my life personally, as well as, a lot of the people that I work with and talk to, is that when they figure out how to engage with their CPA or their accounting professionals more efficiently and effectively, that relationship sort of improves.
Yeah.
So that leads to this conversation, which is, Grayson, what the heck are the things people should be doing or thinking about right now so that they can have a more effective kind of tax season? Like, what can they be doing to prepare for that engagement with their CPA or EA or whatever tax professional this year?
Yeah, well, you brought up a good point. There's actually two things that I want to hit on that happened before the tax season meeting. And the first thing being communication. A lot of our clients, or a lot of clients in general, meet with their accountant once a year. And it's usually during tax season. They come in, get ready to prepare a return. They bring all the stuff that they had from the prior year. Mm-hmm. But at that point, it's already too late, right? There's not a lot I can do from a tax perspective. I mean, there's, some retirement account options, health savings account, that kind of thing that we can do by the filing deadline. But as far as helping them with their tax issues, I need to be proactive in that and not reactive, right? And so, ideally, if you could meet with your accountant semi-annually, maybe quarterly, and just sit down and say, hey, even if it's a Zoom call, hey, this is what I've got going on. This is kind of what I'm thinking about doing. What are your thoughts on this?
Yeah.
I prefer in-person or Zoom meetings for that. Phone calls, I feel like things can kind of get lost in translation.
Yeah.
But communication is key. And that goes for both ways. Us accountants, we're not perfect. We're not excellent communicators all the time. But if we have that rapport or that relationship with our client where we know, hey, they're going to be reaching out to me in the off season. And in the off seasons when I have the time to devote to their issues, right? Yeah. So meet with me. Let's set out an hour and a half, sit down, figure out what you got going on and kind of see where things go. And that way we can devise an actual tax plan or tax strategy that we can carry out throughout the year. Because ideally with my tax meeting that actually happens during tax season, I'd like to sit down and say, hey, this is what we planned for last year. This is how it shook out. How are we looking for this year? Mm-hmm. And can we transition that into a proactive meeting, getting the compliance work done, getting the taxes filed, all that. But how do we transition that to a proactive meeting where we say, okay, how is 2025 looking for you?
Yeah.
Anything big coming down the pipe? Are you buying a building? Are you, did someone in your family pass away and they're leaving you an inheritance? Something like that where I can say, hey, let's talk about that.
Something that I've heard from a few clients that I find kind of interesting is that those are the things that they're looking for from their accountant. They feel like they're not getting it, but they also feel like they shouldn't have to ask for it. Like the accountant should be proactively initiating that conversation. Tell me how you feel about that, or if you think that should be on the client to initiate that type of relationship, or if that should fall onto the tax professional. Just kind of your perspective on that.
It depends, right? So as a firm, we work on an engagement basis, right? So when we go to prepare a tax return, we have our client sign an engagement letter. That engagement letter engages us to actually prepare the tax return. Okay. So from that perspective, we view our clients as nothing is guaranteed, right? So whether they come back to us in the future, we hope so. We hope we've built enough of a rapport with them that they'll come back. But it's strictly an engagement, and that's business, right? They have the opportunity to go out and find someone else if they choose to do so. The the other side of that coin of wanting the accountant to be proactive, I get that. What you're asking for is kind of a blank check model, though. And so there is an increased cost with that proactivity. And if you didn't ask for it and I generate a bunch of WIP or a large bill in trying to be proactive, sometimes that doesn't always make people super happy.
Yeah.
That makes sense. I think that's a great perspective to share.
And one other thing too is, a lot of times people think, well, my issue is it's just a phone call issue. Let me call in and, take 5 minutes and try to get this hashed out. And a lot of those issues are actually more complex than that. And so my preference is actually, even if it's just going to be a phone call, to have that scheduled with my office. And so that way I have a dedicated block of time to give that the time and attention that it needs.
Yeah. Yeah. There's certainly a cost to that. And, I think that's one of the things that keeps people from leaning more in with their accountants. I know that we get a lot of really positive feedback from our clients on the work that we do on the tax planning side. But I always try to remind people that even though we do tax planning, there's a limiting scope of the work that we can do on that, right? So we, obviously we don't file returns. And if we're not filing returns, we have to bring in that compliance partner, right? We have to bring in someone like you as a CPA or whoever their tax professional is to say, this is what we're trying to accomplish. But how does that conflict or align with the way that it's going to, file in the end, right? Is we need that partner. So even where we do tax planning, it's still not, we're not a one-stop shop, and we still need additional support from, CPAs. Now I found that usually when we go and engage, so a client says, hey, this is my financial planner, and can you, this is our CPA, and, he's got questions and whatever, can you guys kind of work together? Because we speak accountant is kind of what I tell people, right?
Yeah.
A lot of times it can be that, 5 or 10 minute phone call, something really quick.
Absolutely.
Because we have that kind of, that more efficient level, and no, that's fine. Great. And that's usually not a, big cost issue then for the client. And usually what we're trying to do is, we're trying to make it actually easy on the CPA in filing time.
Yeah.
And they usually are appreciative enough that so you can start that proactive process.
Yeah.
But that also only works if somebody's engaging a quality financial planner and wealth management advisor that's starting to do this type of work and have it organized. And then I think one of the struggles that people have when they think about tax planning is that you guys so often have the same kind of questions that we would have for people, but we're building out a more in-depth picture of their, goals and where they're trying to do and accomplish. And, okay, if they put money in a retirement account, how are we investing it? What's our growth expectations around that? Whereas accountants sometimes are limited in scope of that bigger picture. Yeah. And so what I've observed is you guys have a really heavy lift if somebody's saying, well, okay, I want this proactive, meeting. But if the client is coming in and they don't have their own financial plan kind of figured out, it's really hard for you guys to start doing the tax work in a deep level. So communication has made a huge difference. Yeah. I think in that regard, with my observations. I don't,
Yeah. And you bring up a good point. When I've got a new client that maybe doesn't have, a wealth advisor or a financial advisor, and I sit down with them and I say, so what are your 5-year goals? Because, there are certain tax strategies that we have that can reduce tax a lot year 1. Yeah. But not a lot years 2 through 5. And so do we want to be more aggressive on the front end, or do we want to spread that out over the next 5 years? Yeah. And how does that fit in with their goals? But you're right. A lot of people don't know. And
they don't. And what I observe is that it's the same behavioral bias that drives bad investment returns, which is the pain of watching losses is significantly more impactful emotionally than the pleasure of watching gains. And so when you get to taxes, it's flipped, right? Yeah. It's, hey, we could have, at the end of 5 years, a lower net tax paid out to the IRS if we do it this way, right? Or you can pay no tax this year, but you end up paying way more over 5 years. Yeah. And the pain of having to write that check this year is so big
that they want it
in their emotionally that they just say, just give me the, give it to me this year and I'll figure it out next year, you know? And it's like, it's really what it creates a problem that begins to compound.
Yeah. Because they're looking at it as that's next year's problem, right? And maybe we can figure something else out, or maybe the tax code's going to change where it will benefit me at that point. I'm just going to worry about today, right? Yeah. And I don't think that that's the best strategy for anybody.
Well, like in case anyone doesn't know, the tax code can also change and affect you adversely.
Yes.
True.
So
yes, and that's probably the more common scenario.
Yeah. I mean, I don't know if you have an opinion on that. Slap my hand here, Grayson, if I'm out of line. But I think it's actually somewhat random. Yeah. Like some people, when you got the Tax Cuts and Jobs Act, it was like really great for a lot of people. Mm-hmm. But some people that you wouldn't have suspected, got, I don't want to say the word hurt, but they end up paying more tax, right?
Yeah.
Especially if you were in
can impact people differently.
Yeah. Yeah. Like, especially if you're in a state that had, has high state taxes, right? Like those SALT limits.
Absolutely.
That stuff. So it's like, it's a little bit random. Like, it's not just like, oh, well, if I'm in a lower income level, things should just get easier for me. They're only going after the big guys. Sometimes they make these changes that are a net positive for everyone en masse, but because of your unique tax situation, there's one or two little nuances and all of a sudden it's actually not good for you. Mm-hmm. Right.
Yeah.
So, forecast that out however you want, but, I choose not to.
So communication is like number one big thing. What would you say is like the next step in having that efficient?
Before we go on,
okay,
I want to just clarify communication.
Yeah,
because we want to talk about what can people do right now.
Mm-hmm. Yeah.
Okay. So the time to do a tax planning meeting in June last year already gone.
Yeah,
it's already gone.
Mm-hmm.
So is the next best thing for somebody to do from a communication standpoint right now, like send your accountant an email today or a phone call and just say, hey, I want to let you know I'm planning on coming back to you this year. Do you have I see most accounting firms have like an intake packet of sorts, like request that. If you haven't gotten it, I would say request it and, and then fill that out in a timely manner and, get it back and just communicate, hey, I'm coming back. I'm gathering my documents.
Yeah.
Can you save a spot for me?
So it's funny that you bring that up because that's actually my next point is talking about what you can do pre-meeting to prepare for that.
Okay, perfect.
And that's the client organizer. And so, for example, in our firm, all of our returning clients either get mailed or emailed a packet that has everything that they had on their prior year return, as well as a list of questions that they answer yes, no, or not applicable to. Mm-hmm. And what that organizer is designed to do is it's designed to help give me insight into what your year was like from a tax perspective. Mm-hmm. Because if you mark yes on one of those questions, like maybe you had a kid that decided to go to school or they graduated, turned 18 and then went off to university. And I won't know that. I'll just know that the dependent aged out unless you communicate that to me. Yeah. But if you fill out that organizer and as I'm sitting down with you and I'm going through it and I say, hey, you marked that there's education expenses this year. Can I inquire a little bit more about that? Mm-hmm. And then, start going down the rabbit hole of, okay, maybe there's some education credits that we can claim on your tax return this year. Yeah. And kind of dive in a little bit more. And the same thing can also be said for prospective or new clients that are meeting with a CPA that they haven't met with before. Yeah. The preparedness starts with bringing a copy of your prior year return, calling their office, and most offices will have a blank client organizer that they can forward to you ahead of time. Mm-hmm. And you can actually go through that process yourself. It'll be a little bit more handwriting because, it won't have all that data just kind of dropped in there. But, if you can bring that to the meeting, it helps me identify, okay, what did we have last year? What did we not have this year? And how can we obtain that information?
So in our practice, I would love to have that kind of information ahead of time, right? Yeah. Like, I view that from like an efficiency standpoint. Mm-hmm. I can flip through something similar to that in my world and you jot down a couple notes, and now I know exactly what I need to talk about, like what rabbit holes I might need to go down, and versus like, okay, that's a very mute point I don't need to, touch on. Is it efficient or like more efficient or impactful for somebody to bring that back ahead of time and say, look, like if I'm a new client, here's my last year's tax return. Here's my, what would you call it? Like the client organizer. Here's my client organizer. I wanted to get it to you 2 weeks ahead of our, meeting.
Yeah.
Right.
And that's something that would help improve efficiency from the tax perspective. And that actually ties into my third topic, which is gathering your tax documents. Right. But that organizer is so helpful because, when I input like a brokerage statement, for example, if you don't tell me that account was liquidated and I'm expecting that brokerage statement and I don't have it, and that causes delay and I end up reaching out to you and saying, hey, I don't have this. You're like, well, let me go to my financial advisor and let's find out where this is. And they're like, oh, we closed that account. We don't have that anymore. Now I've sat on your tax return for a week or more, longer than I probably should have. Whereas if in that organizer, we go through and say, okay, this brokerage statement ending in account XYZ, mark that off. And now I'm not expecting it and we can move forward to something else.
Yeah. Does that, I would assume part of your client organizer, part of that is like listing out where you are expecting documents to come from, like an expected document list, have a little checklist,
So one of the nice things about my software is any document that I input, so whether it's your HSA form, your education form, W-2s, 1099s, what have you, it'll print on that organizer that we had it last year. And then it's got a check mark that you can check and say, hey, I don't have this anymore.
Yeah.
And so then that way I know not to expect it.
Yeah.
Because that's actually, when I do meet with clients and they don't have all their documents, that's exactly what I'm doing is I'm going through my software and saying, well, this is what we had last year. Do you still have that? And can we track that down?
Yeah.
Does it also include somewhere of like new things too, of like asking questions and like, I guess, how do you go about asking those questions to make sure that people are recognizing that they should be telling you something? Because I think that's one of the challenges is people they don't know what they should be providing to their tax advisor.
Well, and that's a very fair point, right? You don't know what you don't know.
Yeah.
And so that's the first, I think, 3 pages of our organizer are all questions that are designed to help me ask leading questions or inquiring questions, right? Like, okay, you marked that you started receiving money from a retirement account. Okay, you're probably going to need a 1099-R from that. So I need you to go to whoever's managing that retirement account and request that form. And that helps me give them some guided access as far as what they need to be doing.
Yeah.
Checklist.
That's awesome. Yeah. I love
checklists, right?
Yeah.
Can you believe it? I'm defaulting to a checklist here.
Well, it's valid, and it can be really a big hurdle for people to get organized around tax time, right? Like you're trying to start your new year. So now particularly if you own a business, right, you're kind of in like that like Q1, got to get, everything going for the year, whatever it is. You were so busy during the holidays, you're behind at work now or catching up, right? Like there's just exciting stuff going on in Q1 always. And it's like the last thing people want to deal with is their taxes. Absolutely. One of the most important things people need to deal with is their taxes. And so I think trying to be organized around that, I know for us, we have like an app clients can use that we use to send stuff, and store things that are sensitive and need encryption. And but there's an app that they can have on their phone. And, I tell clients like, when you get that tax letter in the mail, like just pull up your app, go to your tax folder for this year, take a picture of it, with iPhone, phones nowadays will scan it to a PDF, put it right in there and start, accumulating these documents that show up in the mail that you're always like, oh yeah, we gotta, so instead of having because they come in email now and some come in the mail and all that stuff. It's like, instead of having some stuff in the drawer and some in your email inbox somewhere and some you got to log in to get it, start putting them all in one place electronically, that it becomes easy when the accountant, like most accountants now, I find have a way for you to send them documents digitally, upload them like some kind of portal. It's just all electronic. They send you that link, boom, you can go right from your phone, upload them all, and if you have that, client organizer, you just check them off. Yep. Cool. I got them all the things. Was there anything else that I'm thinking of that, we did this year that might kick something off?
Yeah.
I think some of the things people forget about when they're thinking through that checklist is when they roll over IRAs, 1099 kicked off on that. And they think, well, I don't need to do anything. Okay. Again, slap my hand if at any point I'm wrong here. You still have to file that 1099 and say, nope, it was just a rollover, no tax due.
Yep.
So you still need that document. New brokerage accounts, or something that changed custodians halfway through the year. You're going to have so if you had an account at Vanguard and now it's at Charles Schwab or something, it's you're going to have a statement from Vanguard most likely and a statement from Charles Schwab. Yep. It's no big deal on your guys' end. You just need to make sure you get them all right.
Yeah.
The health insurance, what is it? The 1098E.
1095A.
1095A.
Yep.
And the 1098E is the student loan interest, right?
Yep.
So with that starting back up, don't forget to go get those.
Yep.
Yeah.
And then anything else that was substantial income that you need to make sure you report, right? So,
one big one that you didn't bring up is actually home sales. So
that was the title company. Yeah.
Okay. Yeah. So those 1099S's that they issue you can sometimes get stuck in those back of your closing documents.
Yeah.
And you're like, oh, it was my primary residence. I don't have to worry about reporting it. I can exclude up to 250 or 500,000 a gain on that.
Yeah.
And then all of a sudden we file your tax return and 2 weeks later you get a letter from the IRS saying you owe 125,000.
Yeah.
And you're like, wait, what? What happened? And it's because we didn't report it on the return and didn't report the exclusion on the return.
Yeah.
And so now we're having to go back and say, hey, just so you guys know, this was an excludable gain. Here's the, supporting documentation for that.
Yeah. So theoretically, everyone has to have issued out their 1099s by January 31st.
Correct.
Right?
Yep.
So in February, as you are working on this process with your accountant, you can log into the IRS website and get your tax transcripts, right?
So tax transcripts generally are available in June for the prior tax year.
For the prior tax year.
Yeah. Okay. So if you're a client that normally extends, that's actually one of the things that we love to do is to get a 8821 information authorization form or a power of attorney.
Yep.
And one, that way we get correspondence notice, but two, also so that we can pull those transcripts and help you track down documents that you might not know you have.
Yeah. Big one. So do your best to keep track of things.
Yeah.
And then, if you can we talk about for a real quick second?
Yeah.
Because I think a lot of people get this wrong. There's so much stuff on social media now about the wealthy people never pay taxes in August, in April. They file an extension. They don't pay taxes till August 15th. And that was a strategy that maybe worked when interest rates were at 0%. But now what's the interest rate at the IRS? 8%?
It's mid eights right now.
Mid eights. Let's call it 8.5.
Okay.
So if you owe money and you're like, well, I'm going to take this little hack. I'm going to pay him in August, or I'm going to pay him in October. You're accruing interest on the money you owe the IRS at 8.5%, which is, that's not a low amount anymore.
No,
it can be thousands of dollars. So I hope you're doing something very productive with the cash if you're kicking that can down the road. And I find that most people aren't doing something that the risk is so worth, an 8.5% hurdle rate. So make sure that if you are going to file an extension, my general thought is get an estimated payment in.
Yep.
Right. And a good accountant should be able to help you calculate what your safe harbor payment is so that you can avoid the penalties associated with that. I think if you do the safe harbor and then you file an extension, you don't get hit with the penalties, but you get hit with any interest on taxes that you would have owed, right?
Yep,
still.
exactly.
Okay.
From April to the date that you file.
Yeah, so safe harbor doesn't save you on the interest, but it saves you on the penalties.
Which the penalties, when you're paying tax, every dollar counts, right? And if you're paying penalty and interest, it's money that you wouldn't normally have to be paying.
Yeah. Yeah.
So an extension is only an extension of a time to file the return. And I think especially small business owners get that muddled in their mind a little bit because, their pass-through entity return is actually due March 15th. And you can extend that return because there's generally no tax liability in those all the way till September 15th with no consequence. But April 15th, we need to make sure you've got payments in so that way.
Yeah, the problem is it passes through to yourself.
Exactly.
Which is due April 15th.
Exactly.
Regardless.
Exactly.
Okay. Okay. Communicate. Organize. What's the third thing, Grayson? What do you got for us?
So the third thing is it ties in with the organization, is making sure that when you meet with your CPA, try your best to have all of those documents because it saves you from a cost perspective of not having to put the puzzle together one piece at a time. But also it gives you more time to process what your tax situation looks like for the prior year. Because if you send me a document and it's in March and I say, hey, I need this next document, and then you send me that document and now I'm down the rabbit hole of, well, actually I need some more supporting information on that. And by the time we get to this, it's April 1st. And I tell you, hey, now you owe 30 grand by April 15th. That's not super fun. But if in March we had organized all your documents or had gone through and, got you a bookkeeper so that your business was up to date on its records. And I could tell you like, hey, you owe 30 grand at the end of April. Now you've got, a month and 2 weeks to kind of chew on that, mull that over. And it's not as, it's still painful, but it's not as painful as, hey, I need you to make a payment tomorrow.
Yeah. I have found that tax planning with clients and having them prepared for that is a game changer, right? When by the time you tell a client, hey, you owe 30 grand and they go, yeah, I know. Right. It's like a way different,
man.
It's like,
I'm sitting there sweating. Like,
my financial advisor. We got it set aside already. We're ready to make that payment as soon as we need to.
The other side of that is when we can do that planning ahead of time, we can also prepare where those funds are going to come from so that it's not such a stressful, oh crap, where am I going to get these funds? And even if they have them, let's say in a brokerage account, then we have to sell out, the next day to get those funds regardless of what's happening in the market.
We don't do that.
I'm saying that's why.
But it has
maybe at other firms they do that.
And now I'm in a catch-22, right? Because you've gained on stocks for now this next year that we have to now plan for.
Right. I'm just saying that's like for people who are not planning ahead and need those funds right away, but have money in their brokerage account because they're not planning properly of where those funds should be.
Well, like all else being equal, right? If you have to make that tax payment and now you're at a place where you're having to take, whether it's out of your IRA or your brokerage account, right? And but you have to take money out, right? You effectively just got a margin call. You just got margin called by the IRS instead of your broker. But it's a margin call nonetheless, which is forced selling. And that's what creates the worst experience for investors. And what I mean by that is you don't have control over where the market is at really any given time. It's one of the aspects of financial planning that is out of your control. Right. And so if, poor Grayson here delivers the bad news on, April 8th or something, it's like, yeah, you owe 30 grand in taxes and the market happens to have just been in a small correction or something. And, maybe it's only like 5 or 6% down off the highs or something, right? It's like you're effectively paying an extra 6, 7, 8% in taxes, which on 30 grand isn't a small amount, right? No. And it's just because you're kind of having to like sell your assets, at a low period, right?
Yeah. Exactly.
Whereas if you planned ahead, you potentially could have started taking assets off the table. Now you have to be careful not to do that too early, because if you just, all else being equal, if you did it too early and you set it aside 3 months ago and, you sold them at a point lower than what they are even in the current drawdown,
missing out,
right? You still miss out on, so now it's even potentially even more expensive than had you invested and then sold.
But being able to plan that out with your advisor and do that strategically makes a huge difference.
And that's the key is like, do you have what assets you have in the portfolio as your mix of assets that can enable you to take that kind of, risk or plan around that efficiently or effectively, right? It makes a difference.
Yeah. And another piece of that I will say is I'm actually glad you brought up the extension topic a little bit earlier too, because I want people to know it's okay to be waiting on documents. Not all documents are created equal. K1s, for example, are,
oh my gosh,
are sometimes, I know how much you love those, are sometimes out of your control, right? And so it's okay if you have to wait on that document, and it's okay to file an extension. But if that's communicated to your accountant or your CPA, we can plan for that and make sure we're prepared for that.
Yeah.
And then it's not, it's probably not the most fun thing in the world, but at least, it's, yeah.
This is like that's a situation I find myself in almost every year. Is like it gets to be February, and I'm like, and I'm telling my accountant, I've got all my documents. Here they are, except K1s.
Yep.
And whether they start the work there or they say, okay, well, we're waiting on K1s. Well, we have more pressing stuff. I'm at least doing my job. Like I try to communicate with the accountant. Here's my stuff, right? Here's as much as I know. I'm a bit more of a nerd than most people. So I'm usually going, hey, I'm looking at all this, you're going to work your magic on your end. I'm expecting to have to pay something, I kind of, it's like, I'm a little bit dorkier than most people. Right. But the K1s are if you don't own the entity in its entirety, or at least a majority shareholder, it's quite out of your control. And sometimes those K1s, like they come after
April 15th.
After April 15th.
Sometimes they come September 15th, right at the deadline.
Yeah. And that puts you in really sometimes potentially a world of hurt. So I always say, like, for those listening that don't know what a K1 is, it's really an indication of the profit from ownership.
Yeah.
Right. And the most common place that people get K1s is if you own a business and it's a partnership.
Yep.
But the other place that people get them is private investments.
Yep.
Will kick off K1s. And that is where I find there's usually like the big delay.
Yeah, absolutely.
Is in the private investment space. Closely held business, if there's a delay, you usually know about it and you know why, and there's like a reason or something, right? And you generally have an idea of what that K1 is coming in at. On a private investment, you really don't. And if it's a sizable private investment, it could vary
a lot.
Sometimes a lot, right? There's some big variance around the expectation. So in that case, communicating with your client, in my opinion, or sorry, not your client, with your accountant and saying, hey, here's all my stuff. I'm waiting on K1s. I totally get it. We have to file an extension and just communicating with them.
Yeah.
Like, hey, I know it's not your fault, Mr. Accountant. It's like, we're missing some documents. I'm doing everything I can on my end. I just want you to know I'm not mad at you. I'm not frustrated that we have to file this extension. Could you please help me understand what my safe harbor payment needs to be?
Yep.
And whether that's an overpayment or an underpayment in the end. Like, I know we're in this predicament because of an investment choice I made, of some kind, and it's not your fault. Let's just get the safe harbor payment in, you know, and that is like, that's the stuff, people, in my opinion, that's a goodwill that you end up with a better experience with the accountant more than, well, this all sucks anyways. And I hate the IRS. We all know that's how everyone in the situation feels, except the IRS. But like, just communicate. Like, I've found when you go to a professional you're working with and just say, hey, just is what it is. Like, I just want you to know I'm not upset at you.
Yeah.
Like,
you may be upset at the situation, and that's fine,
yeah.
but you don't have to take it out
Which
on
is
the
understandable.
professional
Yeah,
you're
don't.
working with, right?
But like, the quickest way to get fired by your accountant, in my opinion, or like or an attorney or anyone you work with, is like, tell them you're mad at them for something that is out of their control.
Yeah.
Well, and in that situation, if somebody comes to me and they're like, hey, this could vary quite a bit, right? And I identify what their safe harbor is, and they're still apprehensive about the interest that they could earn on that. One strategy that somebody could do is say, okay, well, I'm going to have you make your safe harbor payment plus maybe your first and second quarter estimates now.
Yeah.
And because what we can do when we file the return, we reconcile those payments and can apply the overpayment on that return to your first, second, third, and fourth quarter estimates of the next tax year.
Yeah.
So it saves you on the interest if that's something that, you're kind of sweating because it could be a large amount.
Yeah.
Yeah. Yeah. I think a lot of people just forget that there's interest in general. And I think most people don't want to pay the interest once they know it's.
Oh, yeah. Once it's been identified.
Once it's been identified, most people are like, I don't. I'm sure there's some.
Well,
I'm sure there's some
like, I'll pay it. I don't care. I will wait till October 15th and I will pay them on the very last possible day.
And the odds of that same person having portfolio of meme coins, probably pretty high. But I digress.
One other topic that I wanted to bring up is, you brought up closely held businesses. Entrepreneurs live fast and kind of loose, right? And one of the things that
some of them do.
One of the things that hurts them is not having adequate records. And then coming to their accountant during tax season with a shoebox of receipts or with 12 months worth of bank statements and dropping that off and saying, good luck.
Here you go.
I mean, I think most accountants are willing to do the work required to clean that up. Just realize that most accountants will bill you at like $200 to $300 an hour to look through your shoebox of receipts.
Yeah. And, but there's also, from a business owner's perspective, if you don't have the fingers on the pulse of your business,
there's no idea what's going on.
You can't make decisions to better your business or better yourself. Right.
Yep.
And so one of the things that I've really been pushing my clients for these last couple of years is to go out and get a bookkeeper, just somebody that's tracking what comes in, what comes out.
Yeah.
It can be on QuickBooks, Xero, Zoho, an Excel or Google spreadsheet. Just as long as you know what's coming in and what's going out, then you can say, okay, I've got this left over. What do I need to do with that? Because that information right there is super powerful to me. Versus if you drop off 12 months worth of bank statements, I know that that's probably going to take me 2 weeks to get through.
Yeah.
And it's going to backlog me because now I've got all these other tax returns and now this essentially bookkeeping engagement on top of that.
Yeah.
But if you come to me with a P&L that's printed out and it's good to go, even if there's a few adjustments that I need to make, I can sit down and say, hey, we recorded depreciation. We've tied out your interest expense, tied out your loan balances, your AR, AP aging look a little different. Do we want to write any of these down?
Yeah.
Have you paid these people? Are we just missing stuff? That kind of thing.
Yeah.
That's really powerful for business owners.
Gives you a much clearer vision of what the client is doing, what they need, what options they have as far as the credits and deductions and all these different things that you can look at to be able to better help and support them too.
Yeah.
Yeah. I think like most businesses that are larger and have a CFO, especially an in-house CFO, right? Like that's table stakes, right? Like anyone running a medium-sized business, that is table stakes to have books and records like that.
Yeah.
It's the small entrepreneur that struggles, and sometimes they struggle because of the cost, right? Like some, bookkeepers used to be fairly inexpensive. And you would think that with the automation of a lot of stuff, right? With the way that you can link bank accounts to like QuickBooks and automate transaction journaling and this sort of things, like the price would have gone down. However, there's less people doing bookkeeping nowadays, right? And there's less accounting firms offering it in-house. Like it's not as available. And there's a huge demand increase because of the recent societal shift to entrepreneurship, right? Like, America has always been built on the back of entrepreneurs, but in particular in the last couple of years, it's like everyone has a side hustle or a gig or, it's like, remember, like, it's like Uber drivers need a bookkeeper now, right? Yeah. Everyone needs to do their books.
Those entrepreneurs, their goal is to go out and make money.
Yeah.
The record keeping aspect of things is kind of secondary or tertiary to them.
Well, and that's my point is that you as an entrepreneur, and this is really getting off topic of the whole intent of this podcast, but if you are an entrepreneur and you're really good at something, and that's why you're an entrepreneur, that good thing, highly, unless you own a bookkeeping business, is not bookkeeping. And I encourage people to just hire a bookkeeper, find someone that works for you. It might be a little pricey, but if it frees up the time for you to go make more money, that is what entrepreneurs really do. Right. It's just that effective use of leverage, whether it's monetary leverage or time leverage or combination of, right, talent leverage, the whole thing, right? Like entrepreneurs should be
spending their time on the things that they do the best.
They should be really familiar with what I'm saying right now.
Yeah.
So just a quick reminder. Okay. So to recap, if you're getting ready for taxes this year, we got to communicate.
Yep.
Let them know you're coming.
Yep.
Second one is
client organizers, prior year returns.
Okay. And then be prepared for the conversation.
Yep.
Like show up prepared.
Yep.
Right. Like don't show up like, here's my stack of shit. You know, it's like show up. We've got it ready to go. I've given you adequate time to review the stuff I dropped off earlier. You know, where are we at and what final questions do you have for me? Right. In this high intent, you know, efficient meeting.
Yeah. And one thing too is, you know, don't be afraid to ask your CPA questions.
Yeah.
Because knowledge is power. Right. And if I'm able to communicate with the client and explain to them why they owe something or why, you know, their tax situation or their puzzle laid out that way, it can help alleviate some of the stress or frustrations that they have. Again, they still might be frustrated at the situation, but don't bite your tongue in the CPA's office because you don't want to ask questions. Please do. Yeah. I'm here to help you. I'm here to inform you. And you know, the knowledge, the rising tide floats all boats, right?
Yeah. Yeah. You're not willing to say it, but I'm going to say it, which is if you start that conversation or that question with, I saw this video on TikTok, that's okay. That's okay. Yep. Just be prepared for the real answer and be open to it. Like, oh, that was, you know, it completely inaccurate. Or maybe it's accurate, but it's just not applicable in my situation or, you know, whatever. Yeah. Right. Like, or maybe the accountant goes, and I've, you know, heard of this happening too. It's like, yeah, we already did that for you. It's already, you know, so like, just realize though, that if you start that conversation with, I saw this video on Instagram or TikTok or whatever, you know, that's not gospel. Yeah. And it's not always IRS kosher to the point that the IRS has put out a memo saying, don't get your tax advice from TikTok.
Yep. Absolutely.
So, with that, let's call this a wrap. Grayson, real quick, if somebody needs some help this tax season, and they want to reach out to you or next tax season, whenever they're listening to this. Yeah. Where can somebody find you?
So I'm over at Savage Esplin Radmall. We're down on Main Street in the same building that Twisted Noodle is. Southern Utah Title, same building. We're just up on the top floor. You can call our office, 435-673-6195 and ask for me. I'd be happy to help them out.
Okay. Do you help people just in Southern Utah, in St. George?
All over the world.
All over the world.
So.
Okay. All right. Appreciate you, Grayson.
Awesome. Thank you guys.